Good morning. Thank you for listening to this video record. My name is Zhou Ping. I'm the CIO of the Yuan Capital. Yuan Capital is a boutique investment manager focusing on investing in China equities. We invest in Hong Kong listed shares, local A shares, and also ADRs. Our AUM today is close to 1.5 billion US dollars. This company, Yuan Capital, was established in 2012. The original team was from GE Investments. We managed GE Pension Fund and also GE Clients Pension Fund at the GE time since 1995 to 2012. We have delivered very strong performance record in the past. Since I became a portfolio manager at GE time in 2000, we delivered 20% annualized return for close to 20 years. We think that more than 1 billion US dollars AUM. Most of our clients are pension funds, endowments, family offices based outside of China. They are in Northern America and also from Europe. Our team, research core team, are based in Shanghai, in China. We have 11 investment professionals. We have 21 total staff. Our investment style is fundamental research and bottom-up. We try to invest and try to find the best company in China that can deliver long-term capital returns. We use qualitative and a quantitative screening process and also use our network. We only concentrate on 10% of the China equities because we believe, and history record shows, that only 10% of the companies contribute more than 60% of the earning growth at the stock market. Our style is focusing on mid-cycle growth or mid-cap names because we believe a company with 10 billion US dollars market cap can become 20 billion and 30 billion, which means they can be double and triple in the next 3 to 5 years. If a super large names like Alibaba, they will be difficult become double and triple in the future. And also because we are focusing on mid-growth cycle companies, then they are less researched by sell-side analysts. So we want to find those companies early than the market so we can deliver superior return than our peers, not just better than index. Because our focus mainly on mid-cycle growth companies, we spend a lot of time on road to visit companies. All those companies that classified as mid-cap names, we will visit all of them. And we want to see all the senior managers, in particular, those CEOs and chairmen or dominant shareholders of the companies to do our due diligence. On an average year, the total team will do on-site visit 400 companies per year. China, in the past 23 years, has spent huge amount of money in infrastructure. China has built massive amount of the transportation logistics network, the highways, airports, and also high-speed train network system. This build-up actually linked many remote area to large cities, and also village to link village program. This network link village to village and also remote area to cities helped poor area people to access the service or technology from the developed area, and also they can sell their products, which in the past is impossible, the agriculture products, to the cities. So this linkage between remote area to developed area really helped the economy continue to grow in the next 10-20 years. China in the past 20-30 years lifted extremely poor population, hundreds of millions of them. And also last 2 weeks, China announced China has no extremely poor village. It's zero today. So this is a massive success in the world compared to any of the emerging countries. China today has the largest middle class in the world. So because of this, the huge consumer market is very attractive for investors. Going forward, because of the lifestyle change, and also China has abundant capital, and also China has trained huge amount of technology people. So our focus on China investment will be mainly in 3 areas. The first area we believe is green tech, because China wants to meet 2060 carbon neutral society, and also in the new leadership call on green mountain, clean air, and also clean water. The focus on investments will be on green technology. So going forward in China, any companies with the technology can distribute their products and services to reduce carbon emission, and also clean air, clean water, and clean earth will be very profitable in the future. In the green tech area, we think China will be the leading country to develop EV vehicles, and China is heavily investing in the value chain on the EV vehicles, for example, batteries and also EV vehicles. So battery demand and also the supply chain on the battery to EV vehicles will be huge developed in the next 10, 20, 30 years. Solar is also another area that will deliver strong earnings growth. A dominant company will be benefit from the growth of this demand. The second I want to mention is also a consensus by most of the investors, consumer. China, because getting wealthy and household getting wealthy, they have more money to spend. Because the population is so big, the lower quality and the lower priced products are still welcomed by many. However, there's a large population, for example, at least 300 to 400 million people, they are buying high quality and high priced products. So for our investment, we are not buying those companies that deliver lower quality products with a lower margin. We'll buy those companies that can provide higher quality, higher priced products. Those are more welcomed by those wealthy population or middle class. In the household space, the first area we can talk is electronics, household electronics. Just like white goods and also other appliances like TV, refrigerators. In the past 30 years, Chinese players from zero to become dominant, 90% plus market share. And other household electronics is gaining momentum. For example, vacuum machines, robot used in households is an emerging sector for Chinese companies. And we have seen some of the companies become dominant in China. And also they're becoming dominant globally as well. They're gaining market share, not just in China, and also in North America, and also Europe. And also in particular, we want to mention here is staples for consumer area. Staples in China, the Chinese companies branding is gaining momentum. All the foreign companies, competitors, getting difficult in China because they don't have distribution channels. And also they are not having their management understand the local market. So they are losing market share. We believe most of the consumer staple companies will be dominant by Chinese companies going forward in the next 10, 20 years. So this area will provide some good investment opportunities. And related to consumer wealth creation and also lifestyle change, Chinese are more care about their health today. So healthcare, medical also provide huge opportunities for investment. For example, the equipment. Chinese companies today, because we have a lot of talents leading those leading companies from global companies like GE, Siemens, Philips. In the healthcare talents pool, by visiting companies, we saw many Chinese graduated from US, in particular, PhDs. They also work in the lab in those big companies that I mentioned previously. So they are become a leading scientist in those research center, and they left those company 10 years ago. And after all those 10 years, they are developing in China and they get mature to deliver their products. We see huge opportunities in those healthcare space, particularly in those equipment space. We saw some companies already deliver strong products to global companies. Another area is technology. Again, China trained huge amount of engineers, not just civil engineers. As you can see in China, is building huge bridge, and also those buildings designed, built by Chinese. And also China trained many software engineers. That's why you can see many internet applications developed in China. And as again, you are aware of the past few years, China has difficulties, has a relation with the US. US has been aware of Chinese development, so they want block some of the technology into China, like chip design or provide chip, high-end chip. This will cause some difficulties in China. However, on the positive side, this forced the Chinese companies and Chinese engineers and scientists aware that they have to develop domestic developed chip and also chip design. Even it is very difficult in early stage, but we believe in the next 5 to 10 years, even they still cannot challenge the top chip manufacturers, but they are going to be in the middle area, dominant in the application area. China will do very well. And because of this, some of the companies will become very big in the future.